Welcome back. We have been dealing with preparation of fund flow statement. Remember the various steps which we have dealt. Numerous steps and rules has to be followed while preparing a fund flow statement. Familiarize each and every step. Try to do as many problems as you can and familiarize each steps. Then only you can deal with a question that has to be faced during an examination. Let us discuss some of the adjustment cases that comes under the same pattern. Next case, prepare fund flow statement from the following data. You will be given a comparative balance sheet. Balance sheet relating to two period is given 2014 and 15. Just go through all the items given in the question. Some of the items has been discussed previously and some of the items are new. Let us deal with the additional information. During the year, fixed assets. FA means fixed asset. For the time being, I am using that abbreviation. Kindly never use abbreviations in the examination. During the year, FA means fixed asset. With book value 11,000 was sold for 9,000. I am not going to repeat that adjustment again and again. You know how to find profit or loss on the transaction. Next one, profit on sale of investment was transferred to capital reserve. And you know how to deal that case. Next one, debentures were redeemed at a premium of 10%. That's a new adjustment. So let us prepare a schedule of changes in working capital. We all know the pattern or steps that has to be followed. Let us begin with the details given in the question. Particulars, the year, corresponding years has to be recorded in the concerned columns, followed by increase or decrease. Increase means increase in working capital, decrease means decrease in working capital. Let us begin with current asset. There are no other further assets, only cash and bank, stock and debtors. First, let us begin with the stock. In the beginning, 2,30,000. By the end, 3,20,000. So there is an increase in the current assets of 90,000. That has to be shown in the appropriate column. Next one, debtors. In the beginning it was 1,70,000. By the end it was 2,40,000. So there is an increase in the current asset that has to be shown in the appropriate column. And finally, cash and bank. Beginning 60,000. By the end it was 1,14,000. So again there is an increase. Since all these three items are increase in current asset, we have shown in the increase in working capital column. Since there are no other current assets in the question, let us take the total of current assets items. Then you will get a total of 4,60,000 in the first year and 6,74,000 in the second year. Once you have prepared the current assets, next you have to go for the current liabilities. And in the liability side, you can see that there is one item, creditors. In the beginning 1,80,000. By the end it was 2,80,000. So there is an increase of 1 lakh rupees during the year. Since it is an increase in the current liability, it has to be shown in the concerned column, that is decrease column. Since there are no other information regarding liabilities, especially current liabilities in the question, let us take, and in the information it is said that one more item, provision for tax. In the adjustment it is said that provision for tax has to be treated as a current liability. If you go through the question, you can see that provision for tax is considered as current liability. See in this question, because since it was in the last line, in the previous slide, it was shown in the after the display. That's why you didn't see that sentence. That is why we didn't saw that sentence. So sometimes you have to be very cautious. Sometimes a sentence like this might be given in the question. See, provision for tax is treated as a current liability. Sometimes it may be any other items, and it is specified that some item has to be treated as current asset or current liability. In that case, you need not have to prepare any non-current account for provision for tax. Just consider it as a current liability item. So let us record that item in the liability side as provision for tax. In the opening it was 70,000. By the end it was 85,000. As usual, how you are going to deal a current liability item, just like that you have to deal with provision for tax. Once you have prepared all the item, you just need to find the working capital, and you know how to find the working capital. You just need to take the difference between current assets total and current liability total, then you will get working capital. And remember how we are going to find the increase or decrease in working capital. I hope you all guys know. Just for the time being, just explaining how to do the steps. First of all, you deal with these two columns. Here the bigger value is 3,90,000. Just like a balancing a ledger account, write down 3,90,000 and 3,90,000. So the difference amount is 99,000. Once you have prepared these two columns, then go for the next two columns. This is how you need to prepare while dealing in examination. See, if you go through these two sides, you can see that this side is having a bigger value. See, 2,40,000. So let us write down 2,40,000 in both columns, and you can see that here only 1,15,000 is there. So the remaining amount will be considered as the balance. And see, here the higher value is in the increase column, so we can write as increase in working capital. Actually, the rule is whenever this side is greater than this one, you have to consider it as increase in working capital. And for the time being, I am just giving a trick to remember how to write increase in working capital. So increase or decrease, that is depending upon which side is having the higher total. So the difference is 99,000. If you are getting the balance in both sides equal, then that means your computation steps was correct. Once you have prepared schedule of changes in working capital, let us prepare the various non-current accounts. Let us begin with fixed asset account. That was the first information. And first of all, write down the opening as well as closing balances. Opening balance was 11 lakh and closing balance was 13,50,000. Once you write down the opening and closing balance, write down the additional information details given. During the year, fixed asset worth rupees book value 11,000 was sold for 9,000. Remember here book value is already given. So first of all, write down sale amount by bank 9,000, by profit and loss account 2,000. And you know how to find the profit or loss on sale of a fixed asset. Remember here book value is already given. Previously in the previous questions, here the book value was not given. In that case, you were finding out the value of book value. Since the book value is directly given, you need not worry about anything else. So you just take the difference between these two amounts. That is, the value was 11,000. It was sold for 9,000. So there was a loss of rupees 2,000. So that is recorded. And next one, depreciation. Accumulated depreciation 34 is taken directly. Next one, you can see that both the sides, that balance total is not coming same. There is a difference amount in the left hand side, so it is considered as to bank purchase. So once you have prepared fixed asset account, next you need to prepare investment account. Remember, you have to prepare provision for depreciation, because provision for depreciation opening and closing balance is given. For the time being, let us start with investment account. First of all, write down opening as well as closing balances. Investment opening balance and closing balance is already given. 2,10,000 and 1,60,000, and in the adjustment it is said that profit on sale of investment was transferred to capital reserve. Capital reserve, it is said that 10,000, and you have to be very cautious how you are going to find the sale amount. That is the hidden adjustment in this question. In the beginning it was 21,000, by the end it was 1,60,000. So you can see that there was a difference of rupees 50,000 during the year. 50,000 cash. So we know that it is a sale of an investment. So 50,000 rupees might have been received as cash during the year. But in the adjustment it is said that by the sale of investment, the concern has earned a profit of rupees 10,000. Then how much amount might have the concern earned by the sale of the investment? It is quite simple, because profit is already said that 10,000. So the sale amount will be 60,000. That is a concept that has to be followed while dealing with the same type of adjustments. Remember, in the beginning it was 2,10,000. By the end, it was 1,60,000. So it is quite natural. There was a sale of rupees 50,000. But in the adjustment, it is said that it was sold at a profit of rupees 10,000. Remember, in the balance sheet, we will not be showing any sale amount on the base of profit. We will write only the actual difference in the value of the asset. So the value of the difference was 50,000 and it was sold for at a profit of 10,000 means total cash earned by that transaction was 60,000. This is how you have to show the computation. And the profit is shown here and it is said that the profit amount was transferred to the capital reserve. So if you take the total amount, you can see that both the sides remains the same. So there was no purchase or sale further during the year. Next, you have to prepare debentures account because in the question it is said that during the year debentures was redeemed for 10% at a premium of 10%. First of all, let us write down the opening balance as well as closing balance. Opening balance is 3 lakhs, closing balance is 2,25,000. And she said that debentures were redeemed during the year. And how you are going to find the amount repaid? From the mere difference between these two amounts, you can see that there was a difference of 75,000 in the value of debentures. And in the adjustment, it is said that debentures were redeemed at a premium. Usually, premium is paid on the redeemable amount. Here, the redeemed amount was 75,000. So, the premium will be 10% of 75,000. So, the actual payment was to bank 82,500. That is 75,000, the difference amount plus 10% premium. Usually, when premium is paid on debentures, the concerned entry regarding the premium debentures has to be shown, and usually premium paid on debentures has to be transferred to the P&L account. So, by P&L 7,500 premium has to be shown. So, if you take the total of these two sides, you can see that both the amounts are equal. So, there are no further purchase or sale, not sale. No, there was no further purchase or redemption during the year. Next account you have to prepare is proposed dividend account because we all know the rule for preparing proposed dividend. Let us begin with the opening balances as well as closing balances 30,000 and 40,000. Since there are no information regarding proposed dividend during the year, we will consider the opening balance as during the year payment to cash 30,000. And every year you need to prepare a provision for paying dividend and the closing balance is considered as by P&L 40,000. So that account also tallied. And we have prepared almost all the accounts and you need to prepare one more account, that is preparation of accumulated depreciation account. Usually it has to be prepared just after fixed asset account. For the time being we are preparing at the last. And we are preparing accumulated depreciation account because in the question provision for depreciation account is given. Accumulated depreciation and provision for depreciation are both the same. It begins with opening balance as well as closing balance. Opening balance is 2 lakh, closing balance is 2,80,000, and in the question it is said that accumulated depreciation on asset was 34,000. So it will be written as to fixed asset 34,000. So the balance amount or the remaining amount will be considered as by P&L. And you know how to take the depreciation in the fund from operation account. So we have prepared the accumulated depreciation account also. Now let us prepare fund from operation. And we know how to prepare a fund from operation. It will be beginning with net profit during the year, and you know how to take the net profit. In the question the P&L account is given. See here P&L account is given. So let us take the difference and you will get 1,10,000. And on 1,10,000 you will be adding all the non-operating expenses, it can be found in the concerned non-current accounts. So let us begin with first one, accumulated depreciation. Here see 1,14,000. Remember, in the fixed asset there is also one depreciation, and I have mentioned it countless times in the previous sessions. When you are preparing a accumulated depreciation account, you need to take the depreciation of this account only. Never take this accumulated depreciation found in the fixed asset account. You will be taking that amount when you are not preparing an accumulated depreciation account. So we have took the amount as depreciation 1,14,000. Now let us go through all these non-current account. You can see that first one in the fixed asset, just go through P&L item and depreciation item. This depreciation will not be taken. Here P&L account is there, loss on sale of asset 2,000. In the next one, in the investment account, you can see that there is one profit on sale of investment, but it was transferred to the capital reserve. So such a transaction will not be considered during the computation of fund flow statement. Next one, in the debentures, you can see there is one P&L account, premium on redemption on debentures, that has to be shown, premium on redemption. And finally, there is proposed dividend. In there also, there is one P&L account, 40,000, that has to be shown. Once you have done with all the non-current account, you have to go through adjustment information if there is any item which you have missed. And we have almost prepared all the account for on the basis of additional information, so you need not have to worry about the additional information. Just go through the balance sheet given in the question, and you know what all items has to be considered. General reserve, intangible assets, premium on redemption of debentures, discount on issue of discount on issue of shares and debentures, and preliminary expenses written off, and miscellaneous expenses. And on the basis of the item which I have mentioned now, there is one general reserve. See, one general reserve, capital reserve cannot be taken. Miscellaneous expenditures. See. So first of all, let us transfer to reserve. Usually there will be an increase in the reserve amount, and you need to take the difference of these two amounts. Next one, miscellaneous expenditure. There will be also an increase in the amount, usually in almost all the questions. So you need to take the difference, and it is considered as miscellaneous expenditure 4,000. And we have took almost all the items. So by adding all these amount, you will get the total of fund from operation during the year, that is 3,37,500. Once you have prepared fund from operation, next you need to prepare the final step, that is fund flow statement, and you know the steps for preparing fund flow statement. Let us begin with first item, increase in working capital. That was the first one or first statement of the schedule which we have prepared. There was an increase in working capital, so it is shown the application side. After that, let us begin with fund from operation. It is a source, fund from operation 3,37,500. After that, we have prepared various non-current accounts, and you know what all items has to be considered. All the cash and bank items has to be recorded in the source and application. First one, in the fixed asset, there are two bank items. One is purchase, another is sale, and you know what is meant by purchase and sale. One is application, another is source. Here there is a sale of 9,000, so it is shown as sale of fixed asset 9,000, and another one is purchase, so it is in the application side, purchase of fixed asset 2,95,000. So fixed asset is over. Next one, investment. There is also one sale of investment 60,000. So it is a source, sale of investment 60,000. There are no further bank or cash items. So let us go to debentures. In the debentures, there is one item, bank, that is redemption of debentures with a premium. It is a payment, so loss of money. So it is an application, redemption of debentures 82,500. And finally, proposed dividend, there is only one item, dividend paid during the year 30,000. So dividend, proposed dividend 30,000. So let us go through the question part. In the additional information, we have dealt almost all the accounts on the basis of this additional information. So let us go through the items in the balance sheet. You can see that share capital, first one, we didn't prepare any account, so you can take the difference of these two amounts. In the beginning, it was 6 lakh. By the end, there was 7 lakh. So there is an increase in the share capital. That means during the year some shares might have been issued to raise fund. So fund is generated, so it is a source. So it's issue of shares 1 lakh. Next one, general reserve is completed. Debentures. We already took the debentures amount because we have prepared debentures account. You need not worry about any items for which the account has been prepared because we have already considered those accounts. So after that, if you go through it, there are no other items that has to be considered because we have took almost all the items. So if you take the total of these two sides, you will be getting same amount. If you are getting the same amount, your computation and steps were right. So this is how you have to prepare a fund flow statement, and I hope you all guys know how to prepare a fund flow statement, and you might have familiar with almost all this steps because we have been repeating the same steps again and again, and in some cases there are some quite new adjustments. You just need to familiarize the adjustments, and the rest of the steps all are same in almost all the cases. So just go through it, familiarize each steps, understand various adjustments. We will be discussing further cases in the coming session. Just go through it. If you have any issues, please let me know. That's all for today. Thank you.